Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're cracking open a really high-stakes strategic blueprint.
We're looking at the prepared remarks from Robert Reffkin. He's the CEO of Compass Inc., right after their Q3 2025 earnings call.
And this isn't just about one company, is it? It feels like a window into the whole residential housing market's future.
Absolutely. You hear that phrase everywhere, trough-level market, like everything's just stuck in neutral.
Yeah, stagnant.
But Reffkin's report, well, it paints a totally different picture. It's all aggressive growth, strategic confidence. It just flies in the face of that whole narrative.
So we're watching a company that's somehow doing three big things at once.
Pretty much, they're posting these incredible financial records. They're gearing up for a massive transformational merger, and they're making this huge bet on what he calls agentic AI.
Okay, let's unpack this then. For you listening, here's our mission today. We're focusing only on the CEO's opening statements.
Right, the core strategy stuff.
Exactly. And it seems to break down into three key pillars. First, how are they pulling off this record-breaking organic growth in such a tough market? We need to get into the mechanics of that.
Pillar one, got it.
Second, that huge anywhere merger. What's the playbook? How are they planning to integrate it? And, what makes them think they can pull it off? They seem to point to past successes there.
The validation piece, yeah.
And finally, this AI for AI vision. It sounds pretty radical. What is it, and how does it tie back to the nearly $2 billion they've sunk into their own tech?
It's a really compelling set of sources, isn't it? It makes you rethink what discipline and growth even mean when an industry is supposed to be slow.
Definitely. Let's jump right into the data then. Okay, pillar one, that Q3 performance. I mean, the CEO starts off and just lists this string of records. Yeah. Market share, revenue, adjusted EBITDA margin, free cash flow.
The whole lineup.
It's like a clean sweep of all the key financial metrics, all hitting Q3 records. That's not normal business, right?
Not at all. And, the list itself is impressive, but you really need to grasp the magnitude of the improvement, especially, like you said, in this trough market context you kept mentioning.
So how big are we talking?
Well, take revenue. It jumped 23.6% year over year.
Wow. 23.6%.
Right. And that wasn't just, meeting their guidance. That was hitting the high end of their guidance in a market where, frankly, high single-digit growth would probably get you applause from competitors.
And you mentioned profitability metrics. Those seem even more striking, particularly if you're a shareholder listening in.
Oh, absolutely. Adjusted EBITDA, that's, earnings before interest, taxes, depreciation, amortization, but adjusted, stripping out things like stock compensation or one-off merger costs, it really gets to the core operational profitability.
Okay.
That number hit $93.6 million.
$93.6 million.
Yeah, which is an 80% increase compared to the same quarter last year. 80%.
That's huge.
And it smashed their own high-end guidance by 17%. So when a company nearly doubles its core profitability while the sales environment is supposedly tough, it tells you something fundamental about their operations. The levers are working incredibly well.
But the engine behind all this, the thing that really grabs attention, has to be the transactions, right? Especially the organic part. That tells you if it's just smart deal making or if the core business is actually winning.
That's the absolute heart of it. Look at the wider market. Total transactions crept up by just 2% year over year. Pretty slow.
2%, okay.
Compass, meanwhile, their total transactions jumped 22%.
22, so they beat the market by nearly 20 percentage points.
Exactly. That's a massive market share gain right there.
And the CEO made a point of breaking out the organic piece, didn't he?
He did, and this is crucial. They took out any deals done since July 2024 just to see how the original core business performed on its own.
Pure organic growth.
Pure organic growth. And even on that basis, transactions were up 7% year over year.
Okay, so market up 2%, Compass organically up 7%.
Right, so they're widening that gap significantly. That's outpacing the market organically by 5 full percentage points.
That really feels like the key differentiator. 7% organic growth in a 2% market.
Yeah.
Yeah, that engine is running hot.
It really is. And Reffkin was careful to stress, this isn't just a lucky quarter. This makes it 18 consecutive quarters their entire life as a public company where they've organically beaten the market.
18 quarters.
That kind of consistency points to a structural advantage, and not just riding a wave. They have a system, and it seems to deliver whether the market's booming or stuck in that trough.
And beyond just the sales numbers, he mentioned other operational records. Platform engagement, for instance, a Q3 record, 22 average weekly sessions per agent. What does that signify?
It tells you the tools they build are sticky, they're actually being used. If an agent is logging into the Compass platform 22 times a week, it's not just some basic CRM they check occasionally.
It's central to their work.
It's their operating system. And high engagement like that, it connects directly to efficiency, agent loyalty, and really importantly, the profitability of those ancillary businesses.
Ah, yes, the ancillary streams title and escrow, T&E, and the mortgage joint venture, JV, those also hit all-time records in Q3.
They did. T&E revenue hit record levels. And the T&E attach rate, that's basically the percentage of deals where the client also uses their in-house title service that hit all-time highs in their established markets.
For agents are successfully selling the whole package.
Exactly. When that attach rate climbs, it means agents are effectively cross-selling the platform's other services. And those services are typically higher margin, plus they deepen the client relationship. Same story with the mortgage JV earnings grew to record levels too.
So these aren't just nice little add-ons.
Not at all.
Yeah.
They're high-margin proof points that agents are bought into the whole Compass ecosystem. It makes the entire system incredibly sticky and profitable.
Okay, so part one takeaway. The company isn't just surviving, it's thriving.
Yeah.
And it seems to be because of a consistent, measurable system that beats the market, proven by profitability and how deeply agents are using the platform.
And that system, that mechanism, it obviously hinges entirely on the agents, the professionals actually doing the deals. So the CEO spent quite a bit of time on their, frankly, unprecedented success in recruiting and the financial discipline that makes it all possible.
Right. Let's start with recruiting. Q3 was an all-time record for organic principal agent recruiting. 851 new agents added.
This sounds incredible in a slow market.
It is stunning. And it's not just about bringing bodies in, it's about keeping the right people. Quarterly principal agent retention was 97.3%.
97.3%. That's very high.
Extremely high. If you're a top agent, especially now, you want stability, you want the best tools, and you want a model that protects your income if the market dips. That kind of retention number suggests Compass's value proposition, those proprietary tools we just talked about, is really hitting the mark. And this momentum gave them the confidence to actually raise their future hiring projections.
Yeah, they did. Based on how well things are going, the CEO outlined a new sort of normal range for adding agents organically. They're projecting 800 ads in Q4 and then staying in a range of 700 to 800 per quarter going forward.
And that's excluding any agents coming from future M&A, like the Anywhere deal.
Exactly. That's a really strong signal about their confidence in pure organic growth. It suggests they feel they've really cracked the code on attracting and keeping top talent, even while the rest of the industry might be feeling the pinch.
And Reffkin kind of hinted at why, didn't he? He mentioned agents looking for companies that are proactive, maybe feeling let down by some national associations or lead gen portals. They want support.
That's the positioning, yeah. They're setting themselves up as the haven for the entrepreneurial agent who wants to be empowered, not just managed. But, and this is critical, this growth is only sustainable because it's paired with incredibly tight operational efficiency.
The link. Growth funded by discipline.
Precisely. They improved revenue less commissions as a percentage of revenue, that's a key margin metric, by 73 basis points year over year, up to 18.6%.
And the other side of that coin is cost control. That's the anchor, right?
It has to be. Look at OPEX operating expenses. Their non-GAAP OPEX, again excluding some merger costs, was $252 million. Now, the key thing Reffkin stressed was that this number was basically flat compared to the previous quarter.
Flat, while adding 850 agents and growing revenue significantly.
Exactly. Keeping OPEX flat in that scenario means almost every new dollar of revenue is dropping straight to the bottom line. That shows incredible operating leverage. Phenomenal leverage.
And this flat OPEX connects to that big profitability push they announced earlier, right?
Yes. The plan to deliver an extra $50 to $75 million in adjusted EBITDA improvements, with at least $50 million hitting in 2026. Reffkin gave a firm confirmation they are on track.
So it's not just about cutting costs randomly.
No, it's about fundamentally redesigning the cost structure to be leaner, more efficient per transaction. And this financial discipline, this relentless focus, it's absolutely crucial because it's what generates the cash and, frankly, the confidence to pull off their next massive strategic move.
The Anywhere merger.
It all connects. The agent engine provides the top-line growth, the discipline provides the bottom-line stability and cash flow, and that makes the giant merger actually feasible.
Okay, so now we pivot to the really big one. The game changer. This merger with Anywhere Real Estate. It was announced. It's pending all the usual regulatory and shareholder approvals. Expected to close sometime in the second half of 2026. It's huge.
Huge and inherently risky, right? Anytime you try to combine two giants like this, the big question is always integration. Can you actually make it work without, breaking everything, losing people, messing up the tech, destroying value?
That's the standard fear, absolutely. Yeah. And the CEO tackled that skepticism directly. His stance is firm. This is a pro-competitive deal.
Pro-competitive. Interesting framing. For very deliberate framing. The argument is that the merged company won't just dominate, it will actually bring more choice and better products to agents, franchise owners, sellers, buyers, everyone. By framing it that way, they're trying to get ahead of any antitrust concerns. They've already filed the HSR forms, starting that regulatory process.
But talk is cheap.
Yeah.
How do they build confidence with investors, with regulators, that they can actually integrate something this massive?
By pointing to a trial run, essentially. Reffkin immediately held up their acquisition of Christie's International Real Estate CIR as the blueprint. He basically said, look, we did this successfully on a smaller scale, and that's our playbook for anywhere.
Okay, so CIR is the proof of concept.
It's smart, because they could point to 4 specific measurable things from the CIR integration that directly counter those fears about merger failures.
All right, let's walk through that CIR evidence. First up, talent retention. The fear is always agents fleeing after a merger.
Right. Post-CIR acquisition, what happened? Not only did they keep the agents, but the net number of principal agents actually increased. The total agent count didn't drop.
So it was additive, not destructive.
Exactly. That's huge proof. It shows their integration approach, their value proposition was compelling enough to retain the existing CIR agents and attract new ones into the combined fold. That's critical for calming nerves about anywhere.
Okay, point 1 is talent growth. What was second? You mentioned those ancillary businesses earlier.
This is where the revenue synergy comes in. In just the 9 months after closing the CIR deal, the title business saw a major lift in its attach rate. Over 1,000 basis points, he said.
1,000 basis points. That's significant.
It shows that by bringing Christie's title operations onto the, frankly, superior Compass platform and pushing the efficiency of that single ecosystem, they generated immediate substantial cross-selling revenue.
Makes sense. Third point, something about the mortgage JV.
Yeah, both Compass and CIR had their own separate joint ventures with guaranteed rate mortgage. After the acquisition, they successfully merged and optimized these. The result? Better profitability.
How?
By cutting redundant operating expenses OPEX again, and by boosting attach rates.
So if they could merge 2 separate JVs on that scale.
It provides a credible template for integrating Anywhere's much larger ancillary financial services operations. It shows they know how to handle that complexity.
And the fourth proof point ties back to that operational discipline we talked about.
Costs. Pure and simple cost synergies. They confirm they are on track to hit the $30 million synergy target they set for the CIR deal, and they're doing it by applying that same Compass OPEX reduction playbook.
So CIR proved they could do 4 things. Grow agent count, boost ancillary revenue from both T&E and mortgage, and hit ambitious cost-saving targets.
Exactly. It validates the whole model. They can drive top-line organic growth and bottom-line efficiency after a merger.
And how does this CIR playbook specifically apply to the much bigger Anywhere opportunity, especially in those ancillary areas?
Well, Reffkin highlighted a key opportunity. The Anywhere deal instantly gives them a title and escrow presence in 7 states where Compass currently operates brokerages but has no T&E services today.
So it fills a huge geographical gap in their high-margin services.
Massive white space. And based on that successful CIR integration, the CEO is basically saying, we are extremely confident we can replicate this playbook across the much larger Anywhere business. The goal is to boost market coverage significantly and drive really substantial profit growth after the merger closes.
Okay, the CIR success story builds credibility. But then came what felt like the real headline from the CEO's remarks. He actually raised the synergy target for the Anywhere merger. That's putting your money where your mouth is, right?
It's a huge statement to the market, raising a financial target that significantly signals an immense level of confidence. But, he couldn't just throw that number out there. He had to ground it.
How did you do that?
By reminding everyone of their track record on cost cutting. Specifically, he brought up their 2022 goal, cut OPEX by $320 million.
All right, I remember that. How did they do?
That was just the target, the reality. They blew past it. They hit a $550 million reduction by the end of 2023. And they expect to surpass $600 million in total reductions by 2025.
$600 million.
Yeah.
when the goal was 320.
Exactly. That history of massively over-delivering on cost control, that's the currency he's spending here. It's what makes the new, bigger promise credible. When a CEO can point to $600 million in actual verified cuts, investors are much more likely to believe the next target, even if it sounds incredibly ambitious.
So with that track record established, he upped the ante from the initial target for Anywhere synergies, which was $225 million plus.
Right. Yeah. He said based on the deep dive integration work they've already done, including bringing in a top 3 global consulting firm to validate the numbers, he was making a personal commitment.
Okay.
They will deliver more than $300 million in net cost synergies from the Anywhere merger.
Wow. More than $300 million. That's right. A lot more than $225 million plus.
It's a huge increase. And to put that $300 million number in perspective,
yeah, what does that mean for the combined company?
it works out to 11% of their combined annualized non-GAAP OPEX.
11%.
Think about it. They're pledging to eliminate more than a tenth of the total operating costs of the merged entity. This isn't just trimming around the edges. This is structural surgery. It implies they see massive overlap in technology, corporate functions, real estate footprint, and they plan to apply that same aggressive cost-cutting playbook they've honed over the last few years.
And the timeline for achieving this $300 million plus.
Also aggressive. They committed to realizing $150 million of it, half the total target within the first year after the deal closes.
Half in year one. That's fast.
It's designed to hit the bottom line quickly, show momentum, and prove the integration is working efficiently right out of the gate. So yeah, that $300 million plus figure, that's the new benchmark. It signals that this merger isn't just about getting bigger, it's fundamentally about becoming drastically more efficient through really aggressive cost rationalization.
It really boils down to confidence, doesn't it? Confidence born from their current operational success, confidence from their history of over-delivering on cost cuts, allowing them to set this incredibly transformative financial goal for the merger.
Exactly. So if those merger parts were about consolidation, efficiency, cost, this next part, part 5, is all about the future growth engine. And it's completely centered on technology, specifically artificial intelligence. Reffkin laid out a very clear 3-part vision for AI that really leverages that proprietary platform we talked about earlier.
Right, and he gave it that catchy name, AI for AI. Artificial intelligence to empower agent intelligence. Sounds like the core of their long-term competitive strategy.
It absolutely is. And those 3 goals he mentioned are key to understanding just how broad this initiative is. Goal 1, redefine agent productivity. Make agents massively more efficient.
Okay.
Goal 2, drive greater organizational efficiency. That ties right back into keeping OPEX down, automating internal processes.
Makes sense. And 3,
enhance the agent-client relationship. Notice the theme here. It's not about replacing the agent with AI. It's about using AI to make the human agent vastly more effective.
Okay, let's get practical. Agentic AI.
Yeah.
He said this isn't just like chatbots answering basic questions. What is Compass AI 2.0 actually doing based on the alpha testing they did in Q3?
So agentic AI is about AI performing complex, multi-step tasks autonomously for the agent. Think of it like a really smart digital assistant. He said hundreds of agents were testing this on mobile and desktop, and the features they're testing, they're aimed right at those time-consuming administrative tasks that just bog down even the best agents.
Can you give an example? Like, what would an agent actually say to it?
Okay, imagine an agent is driving between appointments. Instead of needing to pull over and tap through like 7 different screens on their phone or laptop.
Yeah, happens all the time.
They could just use a voice command, something like, AI, create a client collection for the Smith family, generate their client 1 dashboard for the listing presentation tonight, set up a business tracker folder for follow-ups, and tag their contacts in the CRM as Hot Prospect Waterfront.
And the AI just does all that.
Exactly. The system understands the command, breaks it down, and executes all those different tasks in the background across different parts of the platform autonomously. Before the agent even finds a parking spot, that's agentic AI in action. It automates huge chunks of manual work.
Freeing up the agent to do actual agent stuff.
Yeah.
Selling, advising, negotiating.
Precisely. And the CEO mentioned agents are already using it during client meetings.
Live with clients. How?
Yeah, using it, say, during a listing appointment to instantly pull up complex market comparisons or generate custom reports on the fly using AI, it changes the dynamic. The agent becomes less of a paper pusher and more of a tech-enabled, hyper-informed consultant. That directly enhances the client relationship right there in the moment.
Now, this whole AI strategy hinges on something Compass has that many rivals don't, right? That big tech investment.
This is absolutely fundamental. They've poured nearly $2 billion into building their own end-to-end platform. It handles everything from leads and CRM to marketing, transaction management, everything. It's all one integrated system.
Whereas competitors often stitch together different third-party tools.
Right. They might use one vendor for CRM, another for marketing, another for transaction paperwork. And these tools often don't talk to each other very well, creating data silos and clunky workflows.
Why is that integration so crucial for AI?
Because AI thrives on context. Compass's single integrated platform feeds its AI models a complete holistic picture of the agent's workflow, the client's journey, the property data, everything.
Yeah.
It understands the context deeply.
So disconnected systems can't provide that unified view.
Exactly. AI running on fragmented third-party systems will always lack that deep contextual understanding. It'll be inherently less smart, less capable, slower. That proprietary integrated platform is Compass's moat. It protects their AI advantage. And Reffkin said Compass AI 2.0 should roll out to all agents before the next earnings call. So soon.
Okay, that's the internal productivity side. But then Reffkin pivoted to how AI, specifically generative AI like ChatGPT, is changing the external game, how clients find agents. This sounded like a really fundamental shift.
It really did. He said their top agents are actually starting to get free business directly from platforms like ChatGPT.
Free business? How?
Because buyers and sellers are changing their initial search behavior. Instead of going first to a traditional real estate website, they're asking the AI, who's the best real estate agent in Austin for selling luxury condos? Or recommend a top agent in Miami Beach.
And the AI isn't working like the old portals, which just showed the agent who paid the most for that zip code lead.
That's the critical difference he hammered home. The old portal model was pay to play. It sent leads to the highest bidder. Generative AI models, though, are designed primarily to be helpful and accurate. So who do they recommend?
Agents with proof.
Agents with verifiable real-world data, things the AI can actually find and validate. Extensive transaction history in that specific niche, unique listing data, glowing, authenticated client reviews. AI prioritizes demonstrable expertise and reputation over advertising spend.
That completely flips the script on lead generation.
Completely. For a company like Compass, which already has a high concentration of top-producing agents with strong track records, this shift is seen as a massive tailwind. It moves the power away from marketing budgets and towards actual, provable performance. Reputation and results become the new currency for leads. Reffkin basically called it a new era of performance-based lead flow.
But even with all this focus on AI and data, the CEO made a point to bring it back to the human element, didn't he?
He was very clear on this. He said, look, artificial intelligence is not emotional intelligence. AI can't replicate empathy, trust building, the human connection. In this new AI-powered era, he argued, EQ emotional intelligence is what ultimately wins. The tech makes the agent better, faster, smarter, but the human connection is still what seals the deal.
And one last piece on AI. It's not just for agents. It's also being used internally for cost control.
Yes, tying back to that relentless OpEx discipline, they've rolled out a mandatory AI training program for all employees, engineering, ops, legal, finance, everyone. The goal is to embed AI into internal workflows, automate routine tasks, and ultimately lower the cost to serve per transaction. This helps them keep future OpEx increases in check.
So AI is really a double-edged sword for them, boosting agent productivity and revenue on one side, while driving internal efficiency and cost savings on the other. #outro. Okay, so we've navigated through Robert Reffkin's Q3 2025 strategic update. It paints a picture of a company firing on all cylinders, really, achieving these unprecedented financial and operational records.
Yeah, organically outpacing a tough market, fueled by that combination of fierce operational discipline and just incredible agent recruiting momentum.
And that discipline, that strong foundation, is enabling this really confident two-part future strategy. First, that massive Anywhere merger. They seem incredibly confident using the Christie's integration as their blueprint and making that huge new commitment, over $300 million in synergies.
A massive financial target, yeah. And then the second part, that deep strategic bet on agentic AI. Leveraging their unique proprietary platform to completely reshape agent productivity and maybe even change how leads are generated across the industry.
So the core message really feels like
Yeah.
their past discipline is funding their future ambition. They've built the financial stability to make these huge bets on technology and scale, almost regardless of what the housing market does month to month.
Right. And that leads to maybe a final provocative thought for you, the listener, something that goes beyond just real estate. Reffkin kept stressing how generative AI seems to value verifiable, real-world data transaction records, proven results, client reviews over marketing dollars when it recommends professionals.
Hmm.
So if AI really does start consistently rewarding authenticated reputation above advertising noise, think about how fundamentally that could shift the competitive landscape for professionals in all sorts of fields. Lawyers, doctors, accountants, consultants, anyone whose business relies on track record and trust.
Are we entering an era where objective performance validation becomes the primary driver of new business, maybe even more than marketing?
It's a fascinating question, isn't it? Could AI become the ultimate reputation engine, making authenticated performance the most valuable asset a professional has? Something to definitely keep an eye on as AI continues to evolve, far beyond just buying and selling homes.
That is definitely something to mull over. The future competitive landscape might look very different very soon.
Indeed. Well, thank you for joining us for this deep dive.
We'll catch you on the next one.